Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on Netflix, Amazon, and Google, some of the bigger names here. And we've got Netflix pulling back, and it's looking a little bit different than most individual names in the sense that we started the pullback before a lot of those individual names and before the market did as well. So we are currently on our 6th weekday. We had a bullish reversal candlestick yesterday. We did not see any follow through nor confirmation of that candlestick today, not even breaking the high. And that's something with bullish reversal candlesticks. I always look to the high of the day of that bullish reversal candlestick. And once we break it, I know the odds increase a good amount to see the ability to confirm that candlestick. So if the following day's candlestick doesn't even break the high of the bullish reversal candlestick, I know that it's a lot less likely that we see that confirmation. So we did hold the 50-day moving average support yet again, only by a few pennies here, actually 13 pennies, not a whole lot, but this is now the 4th time that we have held it in the past month of trading. So the bulls are still clinging on to support. Even if we lost that moving average, it would not be the end of the world in the sense that we do still have a higher low pattern. We've got 140 on the dot as the must hold level to keep the higher low pattern coming. So the lower high each day now, we have lower highs 6 days in a row. We're looking for that level to break, 143.89, potentially on Monday. Keeping an eye out for the bulls to show up to keep this uptrend intact. We've seen a lot more consolidation on Netflix than we have a lot of the other individual names, and we are coming from the all-time high now and pulling back and still holding exponential support. And that's the main thing that stands out to me. Every consolidation that we've seen over the past it's been about 6 months now, we're holding the 4-period exponential moving average support on the way up. We've come very close to losing it, but every single time we maintain closing above it. So if we lose the 8-period exponential on the weekly, that will stand out to me as a bit more weakness. Amazon on the daily time frame continuing to pull back. We had the huge breakout to all-time highs, and we were just running wild with it. Clear bearish reversal candlestick confirmed with pullback, and now we have the lower wick with bulls buying the dip. So the low of today, 889.31, the bulls are trying to say, okay, we're done consolidating now. That is our new level of support. And you can see they bought the dip with that lower wick. It's not an entirely convincing candlestick in the sense that we don't have well, it is. You could make the argument it's a bullish reversal hammer. The definition of a hammer is that the real body is 1/3 of the size and the wick is 2/3. So this wick is not 2/3 the size of the real body. I would say it's about maybe 55%, but I'm not very picky on the exact definitions of the candlestick. This candlestick does tell me that the bulls defended the 8-period exponential support, and they did buy that dip. So I'm going to be looking for on Monday, can the bulls hold 889.31 and have that base be established as our new higher low of support? And if they can, we will look for the bulls to resume action to the upside. If we cannot, and if we lose this 8-period exponential support, we know further consolidation is coming. The weekly time frame is a bearish reversal inverted hammer rejecting from the weekly upper Bollinger Band resistance. So this candlestick as well would indicate that further consolidation is more likely. So that would make me a bit more cautious on the daily time frame before making a re-entry as a bull, knowing that this weekly candlestick does indicate that further downside is more likely than not. Checking in on Google, Google has been weak, and the bulls bought the dip here as well today. We saw magnified downside the past couple of days. The closes near the lows showed that weakness, but the bulls bought the dip off of 837.30, and that's our new support level. So the range that we're watching here is the all-time high, the low of the pullback. Now we have a lower high on the bounce attempt. Now we have a higher low. So the range is 837.30 to 860.59. If we break 860.59, we're looking at the all-time high. And if we break 837.30, we're looking down at that low of 824.30. So the bulls buying the dip, this is more of a bullish reversal hammer, a little bit closer to that 1/3 to 2/3 ratio of the range of the candlestick. And a green day on Monday will confirm that we're likely to see this pattern continue tightening. This is what I call an equilibrium pattern after a breakout. Pull back, the low, lower high, higher low, lower high, tightening range until we see a clear break. So if we do see some follow through on Monday, I will expect a lower high to form before we get up to 860.59, watching this range continue to tighten up. The weekly time frame did not see follow through from the bullish week last week, and we rejected from the 4-period exponential resistance. Last week we closed just below it. This week saw follow through, but profit taking closed below it again. So it looks like we're going to test this 50, or I should say this 20-week moving average support, the middle Bollinger Band. Looks like another test of that is coming in the near-term future, and currently it's going to be in the low 830s to start next week. So a lot of these names certainly look different from each other. Amazon is the lead bull, and we're watching to see what the market does. The market's in a pretty let's see, what's the word I'm looking for? A pretty tight range in the sense that we had an inside candlestick today compared to yesterday. Bulls certainly pleased with the way the market held up today, and they need to see a bullish break on Monday. So we're watching all these names closely as always. High beta, lots of option activity. We'll check back in some point in the near term future, and we'll see you then.